On today's episode of the Cryptoverse, crypto prices dip again because Tether has finally got itself into trouble with US regulators and traders got spooked. All of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. So let's revisit this descending triangle pattern that we've been looking at recently. The bottom line here is it's still in play. And really, I can only see a room for a maximum of 7 candles that could possibly fit inside this pattern before something has to give. And those candles would have to be within a certain range to fit inside the pattern, otherwise it's going to break. So one way or another, 7 days, within a week, I'm going to have to redraw this descending triangle. Now this pullback from yesterday and the day before to around $10,000, that could have been because of pure technical levels as this consolidation continues. However, we know there has been some news that has likely spooked the market. So let's go and look into that. It's Tether again. The first thing that may have spooked the market is Tether. This is a cryptocurrency that's designed to have a stable value. Now the purpose of Tether is to allow you to move your wealth into a price stable asset without having to go through the pain and the fees of converting it all back into cryptocurrency, or fiat currency rather, converting your cryptocurrency back into fiat currency. Now it's a very attractive offer, which is why you see here in red that $3.6 billion worth of Tether has been traded in the last 24 hours. That's a lot when you consider that there are only $2.3 billion of Tether in existence and only 2 billion of them in the circulating supply. Now this is supposed to work like casino chips, not in the sense that you're supposed to gamble with them, but in the sense that you put your money on deposit and you're given chips that you can later redeem for the money you put on deposit. Now Tether is actually a company based in Hong Kong. So here's the website, tether.to, and in their Contact Us section, they say they are a company based out of Hong Kong. Here it is. And they have offices in the USA. So scroll down to the bottom, click on Contact Us, and you'll see right here, Tether is a corporation in Hong Kong with US offices in Santa Monica and on the East Coast. So say you transfer $100 to Tether's bank account. They will then issue you with 100 Tether tokens, right? For 1 token for every US dollar you transfer to their bank account. Now, people accept these Tether in cryptocurrency trades because they know they can later surrender those Tether tokens to the company and then get the US dollars transferred to their bank account. Now, Tether charge 0.1% fee for transacting to and from their bank account. So that's how they make money. Now, this all sounds great, right? But it relies on Tether having a minimum of $1 US in their bank account for every Tether token in circulation, right? You expect in the casino, when you go and cash out those chips, that they have enough money. Otherwise, that's called breaking the bank, right? If you take chips to the cashier in a casino and they can't pay out, you call it you've broken the bank, they say, right? And you've bankrupted the casino. Anyway, but the thing is, Tether shouldn't be issuing any more tokens than they have in dollars, right? Now, their inability to prove this, their inability to prove that they have enough dollars backing their tokens, it's been an ongoing controversy for more than a year. Then, this news comes out that Friedman LLP, which is the accountancy firm that was supposed to be auditing Tether, they decide to dissolve their working relationship with the Tether Corporation, making the publication of any kind of audit pretty unlikely, even if it was unlikely before. Yet, over 2 billion Tether tokens continue to circulate around the crypto economy. Why they haven't all been redeemed for US dollars by now is beyond me. What is likely to have really spooked the markets, though, is when Bloomberg published an article late yesterday about US regulators sending subpoenas to Tether in an attempt to forcibly verify that they are solvent. Now, while these subpoenas were issued on the 6th of December, this is only really making the headlines now for some reason. And what I've got to say about this is, while none of this alters the fundamentals of the cryptocurrency markets, well, the amateur investor is easily spooked by any kind of bad news. And one of the major appeals about cryptocurrency is that it allows anyone to take control of building their own wealth. So there are two sides to every coin. The bottom line to this is that I'm not doing anything in response to this news, right? I've never touched Tether, never intend to touch it, not interested in it whatsoever. And like I say, this scandal, if you want to call it that, could just have easily have played out in the old financial markets. The fact that they don't have enough money, the fact that they may be insolvent and can't provide adequate audits, well, that's got nothing to do with cryptocurrency as a concept and everything to do with just bad business, right? So anyway, what I am in the process of doing is arranging an interview with Rune Christensen, the creator of MakerDAO, which has this price-stable cryptocurrency called the DAI, D-A-I, which maintains its value, which maintains its value by being backed by Ether rather than backed by currency on deposits with a centralized company, right? Don't ask me how it works. That's why I'm having Rune on the show, because this could offer the same benefits of Tether, but in a decentralized way. So if you're looking forward to hearing Rune talk to us about the DAI price stable token on Ethereum, hit the like button and let me know. Alright guys, thanks for joining me today. If you liked this episode, go ahead and hit the like button, and if you're new around here, get subscribed. If you would like access to my very best material, you know what to do. Head over to my website, cryptoversity.com, click on courses, and you can look at any one of the online courses, or coming up this weekend, I have a live cryptocurrency talk in London, and then the following week, I have a full one-day crypto investing workshop, which you can attend in person, and I'll teach you in person. Other than that, I'll be back tomorrow with another episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.